Okay, thank you. Hi, everyone. We'll get started in maybe just 1 or 2 minutes. In the meantime, if you guys want to put in the chat where you are listening from, I know this is out-of-state investing, so a lot of you might be out of state. So just curious to see if you guys are living, and that will help me figure out where you guys are from. Let me get to share over here. All right, let me give me 1 second to share. Um, all right. Cool. Thank you guys for all attending. This is the wrong slide. Oops. Sorry. Give me 1 sec. Okay. Oh, okay, there we go. Um, can everyone hear me? And I can't see you, so if you can't hear me, just take yourself off mute and tell me. Um, but if everything's good, if you can mute yourself, that'd be great so we don't get any background noise. So thank you for coming to the out-of-state investing webinar for people who want to invest in Colorado. So just a little bit about myself for those of you who don't know me or haven't been in like the Good Neighbor Network before. My name is Olivia McClellan. I'm a real estate agent at Good Neighbor Realty, focusing on high cash flow investments in Colorado. And then I'm also an investor myself. So I bought my first property with my husband in 2022. We bought it as a house hack property. So we lived in the upstairs and rented out the basement. That was a separate like mother-in-law suite on Airbnb, and we were absolutely shocked by how much money we were able to get. It paid our mortgage. So since we weren't paying a mortgage, we saved up enough money to buy another property last year. It's a 5-bedroom house just outside Denver, where our other house is as well. And that's just a full short-term rental. And I midterm rent it in the off season, which is like now-ish through April. And then my husband and I bought our third property in August. So we moved into that as a primary, moved out of our first property, house hack. So we're no longer house hacking. We've graduated, and now we turn that house hack into a short-term rental. We're fixing up this property to be a short-term rental. So we're making it pretty, adding all the amenities, and then in about a year, move into our fourth house, and then we'll chill out for a bit with the property acquisitions and just kind of enjoy our house. So that's my investing story, and it's not as hard as people might think. And so my job here is to teach people how to invest with, meet your goals with minimal money out of pocket. So, and about some more about Good Neighbor Realty. So we're a brokerage of like 10 or 12 real estate agents focusing on high cash flow investments. We have events, both in person and virtual, like this, doing webinars. We have a newly launched short-term rental course. So if you're, just want to get more info about how to be a host, how to find properties, all that stuff, we have this really comprehensive course you can purchase. I can go into more into that later. We have very comprehensive investment property underwriting. And so whether you're looking to buy a new property or pivot an existing property into a different rental strategy, whether it's midterm or short-term rentals, are very skilled at underwriting properties. We have all the data you need. And then whether you're looking to buy or sell a rental property, we have a very comprehensive guide on how to do that, how you getting the most bang for your buck. We have my two managing brokers have this podcast about everything, how to achieve financial freedom with investment properties. We give our clients AirDNA Access, which is the premier data insight platform on short-term rental revenue. And then we have all of the contractors you could possibly need for rental properties in Colorado, whether it's mountains or metro, and whether you need like designers, cleaners, photographers, property managers, CPAs, anyone at all. We have people we can recommend. So happy to share that insight if you're looking for anyone specifically. You can just email me if you want any of this information, by the way. Okay, so now what we're talking about today is I want to do an overview about where it's legal to invest in short-term rentals in Colorado. There's no statewide mandate on short-term rentals. It's all at the city and county level. And so there's lots of pockets where it's legal, pockets where it's not legal, and everything in between. I'll go over kind of the seasonality and market characteristics of the three major markets in the state of Colorado, and then examples of what you can expect for gross revenue and cash flow in these different markets. And then how do you manage a property, a short-term rental from out of state? I'll go into that as well. And then I will answer all questions at the end, just so I can kind of move through this. And then if you want to either raise your hand at the end or put questions in the chat throughout, then I can get to them at the end. So here is a map of all the STR friendly areas in Colorado where people actually rent. All of Eastern Colorado, there's a lot of land there, but no one really goes there for vacation rentals. So we don't really even consider that, even though it is technically part of the state. But I'm talking about like the metro and the mountains where people think of, when they hear Colorado. So in the metro, there are several pockets. I'll kind of get a zoomed in map of this on a next slide, but these are all the places you can rent in like Denver metro. There's also the south suburbs where some of them are friendly. And then once you're getting into the foothills, Boulder County, Grand County, and Park County are friendly. And then for ski resort areas, there are pockets of Summit County, and then Eagle County, which is west of Summit, where like Vail and Beaver Creek are, and then Aspen as well, which is even more west, but there wasn't enough room on the map, so I'm just talking to them. And then another ski area is Winter Park, which is part of Grand County, but that's kind of like a more isolated, but very fantastic ski resort is Winter Park. All right, so this is the zoomed in map of the Denver metro and where there are pockets of short-term rental friendly areas. When I say short-term rental friendly, I'm talking about you are allowed short-term rent as a non-primary residence. If you are open to moving to one of these areas and living in a home as your primary residence and either renting it when you're traveling or renting a portion of the property and you live in another portion of the property, there are many other areas that get opened up to you, but these are the areas where if you do not want to own the property and this is a pure investment property, these are where you can rent. And so parts of Denver that are not in Denver County, like North Denver, which is Adams County, and South Denver, which is in Arapahoe County, aka like Holly Hills, those are allowed to short-term rent as non-primary residences. And then Westminster, Arvada, and Districts 3 and 4 of Wheat Ridge, which is the west part of Wheat Ridge, all friendly. North Glen as well. There isn't like a ton of demand for North Glen, but it is great if you're maxed out at like a $500K budget. North Glen would be a good place to go. The closer you get to the mountains, which are over here, the more expensive the houses get. So Wheat Ridge and Arvada are going to be the two more expensive short-term rental friendly areas of the Denver metro. So now where actually makes money, or which areas make the most money? So we're looking at Denver Metro, unincorporated Boulder County, which is like the rural parts of Boulder, like Nederland and Allens Park. If it's the correct zoning, you can short-term rent there. Park County is great, and then Summit County is great as well if you have the budget for a single-family home in Summit County. And then Teller County as well there's some great return potential out there. It just the legislation's a bit kind of up in the air at the moment. So yeah, hit or miss with whether people like to go there. It depends on the risk tolerance. And then, yeah, like I am happy to chat more in depth about any of these areas and the nuances of legislation here, and do kind of like more personalized meeting if you guys want to chat about your specific situation. Happy to like chat on a separate call as well. This is just a very broad overview. There's much more depth that I can go into here, but I won't for the sake of this call at the moment. So there's 3 markets that that Colorado is pretty much divided into, and that is the metro area, the foothills, which are very much the mountains, but just not ski towns. And then the ski towns is where, you know, the resorts are. Maybe within a 20-minute drive of the resort is still considered a ski town. So for the metro area, the demand drivers there are like any major metropolitan city where there are concerts, whether it's downtown or at Red Rocks, sporting events, conferences, business trips, graduations, visiting family who lives here, bachelorette parties, weddings, and honeymoons. Pretty standard list of like why people come to a city. And then for the foothills, there is demand there for hiking. Obviously, there's really good fishing, cross-country skiing, and snowshoeing in the winter. And then mountain biking. People go out to just like get away and get into the mountains. It's only like 30 minutes to an hour to get away from out of Denver and into like the pure mountains. So people want to just get away. A lot of family reunions will go out there. And then we also see a lot of people going on a honeymoon or going for an anniversary if they get like a cute thing like that. For the ski towns, obviously people go there to ski. That's the main driver, obviously. But in the summer, there's fantastic hiking, mountain biking. People go to there to shop. There's a lot of high-end stores in some of these luxury ski resorts. Bachelorette, and weddings are out there in the summer. And then people, whether they're throughout the United States or internationally, they hear of Vail and Breck and Keystone. They're like, I just need to go there. Like it's very, worldwide, known worldwide. So people want to just come to experience that vacation spot. So all of these markets have different demand drivers, and they also have different characteristics that attract those reasons why people go there. So for the metro, bedroom count is huge. A 4, 5, or 6 bedroom is really where you want to stay, because the more people you can sleep, the more differentiated you are from a hotel. And so a 4, 5, or 6 bedroom property is not competing with a hotel. So that's where we see the best return on investment is with those higher bedroom count properties. Having great gathering spaces is very important, whether it's like a game room or like multiple living areas or a really nice outdoor space with like a fire pit. That brings me to my outdoor space bullet, just having like a very picturesque backyard does really well. And then having an open concept floor plan is fantastic as well because it photographs the best. And so when I'm on showings with clients, I'm always telling them, like, oh my gosh, imagine this in a photo, because you want to look at short-term rental properties through the eyes of a camera, because photos are what sell your property on Airbnb and Vrbo. And so having an open concept floor plan, you can just take a picture of it all in one, and that would be like your main photo that would get people to click on your listing. In the foothills, there's quite a bit different criteria from the metro. And so people go to the foothills, like I said, like to get away and to be in the mountains without paying the price of a ski town. And so they really want to be secluded. So having being able to have like that drone shot of your property with just nothing around it but trees, that does so well for getting clicks and getting bookings. People want views. They come to Colorado for the mountains. They want to have views. So that's important as well. Septic size, if the property is on septic, which most of them are in the foothills, septic size determines your occupancy. And so having like a 3-bedroom septic means you can sleep 6 people. A larger septic size means you can sleep more people.
Miss?
And then architectural style is also very important for the foothills. People go crazy over A-frames and domes and all of like the weird cabin shapes.
Mhm.
So that is really important for the foothills as well. And then for ski towns, bedroom count, again, very important. If you can sleep multiple families in one home, you can charge a higher nightly rate because then those families can split the cost and they won't be as price sensitive. So having a higher bedroom count means you can charge more. Single family homes will always do better than condos, just generally speaking, for any of these areas, but especially in the ski resorts, there are so many condos and it's just so saturated that people who buy condos in ski resort towns are mostly like, I just want to, use a condo for myself and my family. If I make money, cool. If I don't, that's fine. So it's more of a lifestyle investment than like a
Miss, you're actually so
cash flow
gorgeous.
investment. So
You're
single family
so
homes
gorgeous.
are what you want to focus on if you're
You're
looking for cash
beautiful.
flow. And then proximity to the resort is going to
I know you're
absolutely
acting
drive
like you can't hear
demand
me right
if
now, but
you're
you're beautiful.
ski in, ski out, walking distance,
Like
or
the thing is,
shuttleable.
no,
Take
I
the
love
lift.
you.
That
I actually
will
love you.
attract people. Obviously, the purchase prices
I
of the
love you.
homes go
I know
up
you're not trying to break
as you
character
get
right now, but
closer to the
here's
lifts,
something.
but
And
as
hopefully we
does
can
the average nightly
go for
rate.
dinner in the future if you want. Just let me know.
All right, let's look at seasonality
Are you
of
serious?
metro, foothills, and ski towns. So these are annual occupancy graphs taken from AirDNA. And I took for metro, I used Denver. For the foothills, I used Bailey. And for a ski town example, I used Breck. The months for all the graphs are down here. So for the metro and foothills, the demand pattern is pretty similar. You have your highest demand from May through September, and then it starts dropping off in November. There's a pretty steady demand through October because, like in the foothills, you still have some good leaf peeping with the aspens, so it stays pretty steady till October. In the winter, it's not dead, but it's not, it's still the slow season in the winter, the lowest month being January. You also get a bump in the holidays for Christmas, so that's why there's a little bump for December. Ski town demand is completely the opposite. Obviously, people go there to ski, so December through March is your peak season. Your average nightly rates are so high, and then April, May, no one comes to the ski towns. Rates are very cheap, very low occupancy. But then June, July, August, you get another uptick because there's just so many things to do in those ski towns in the summer as well. Besides skiing, a lot of the mountains have like golf courses and disc golf and mountain biking. So there is still a lot to do in the summer. And when I have clients come to me wanting to build a portfolio in Colorado, if they have the budget, I encourage them to get properties either like in Metro Foothills and uh, a ski town because then your revenue patterns are, since they're opposite, it makes your monthly revenue throughout the entire year pretty consistent since the winter demand in the ski town will make up for the, lull in the metro or foothill property. And then your budget will oftentimes determine your location that you will gravitate towards. And so um, the relatively like lower tier, I don't think it is low tier, but the lowest kind of Airbnb-able prices for Colorado generally starts around 500, and then just for the sake of this slide, go up to 850. And this gets you pretty much all of the Denver Metro price points and then the Foothill price points as well. And so if you're looking in this tier, you can expect startups costs to be 20 to 80,000 for furnishings, for some light renovations. If you want to pay a designer for getting a hot tub, that range for that tier. And then annual revenue you can expect to be somewhere between 80,000 and 125,000 a year. Your cash flow will depend on how much you put down, what rate you get, and all those variables, which I can go into examples in one of the next slides. This middle tier is somewhere between 750 and 1.5 million. your startup cost is going to be a bit higher because you're catering more to more of a luxury client or luxury guest. And that gets you the properties that are closer to the ski resorts, but not within like a 15-20 minute drive. And then this highest tier is going to be like 1.25 million up, and that is going to get you a single family home in one of the areas closer to the ski resorts. If you want to be in a ski resort, single family home is 2+ million, but you can probably get in like Silverthorne or Dillon with 1.25 million. And your startup costs will be again even higher because you want it to be more luxury. It's probably going to be a bigger home. So startup costs 75,000 to 150, and annual revenue in these luxury homes is essentially uncapped. Like we have a client in Keystone who has a 9-bedroom property. I think he bought it for 3 million around there. And he does 600,000 in annual gross revenue because he has 9 bedrooms. He can sleep like 3 families. And so he charges a lot of money. So there's money to be made at that higher price point for sure. All right, pros and cons of metro and mountains. A lot of my clients are like, I just want to buy wherever makes me the most money. And there is very similar cash flow potential in both areas. It comes down to the specific property and the specific location of which makes more money, but in general, there's money to be made in both areas. So pros of the metro is that it generally is a lower price point than the mountains, but the foothills can still be in this 600,000 to 800,000 price point. It's easier to find contractors and cleaners. In the metro, there's just more people around, so more easier to find business owners there. Easier to manage the property if you live in the metro area, which if you guys are out of state, this might not apply. And then there's more exit strategies as well for a metro property since you can pivot to a midterm or long-term rental, whereas your exit strategies for a mountain short-term rental is probably just to sell if you can't stick out like a slow period. And then the cons for a metro property is that it's harder to stand out. All of the properties look very similar, like the properties themselves. So you need to stand out by having very thorough, comprehensive design with either, you can theme it if you want, but having really good amenities is very important to stand out in the metro areas. The pro in the mountain category is that the property itself is the attraction. So the seclusion, the views, the architectural style, that all attracts guests in itself. You don't need to go above and beyond with the design, but if you do, that's even better. So properties that have professional design and have some sort of unique aspect about them really attracts lots of guests. And then, of course, you can vacation in the property. If you do want to enjoy going to the mountains, you can vacation at the property as well. Cons can be a higher price point, especially in those ski towns. And then management of the home can be harder because there are fewer contractors and cleaners around that service the more rural areas. That being said, we have clients in every short-term rental friendly area that I've showed you so far. So we either, the brokers ourselves or clients have used lots of, snow removal, cleaners, property managers, everything in these more rural areas. So we have a whole list of people that we can recommend if you do have a need for other contractors. Okay, so now let's get into what like examples of price points, revenue, and cash flow. And so this is a home. I just took it off the MLS. I think it's pending at this point, but this is a very standard home you can find in Arvada at a very standard price point. So this is a 5-bed, 3-bath, and Arvada is just outside Denver. By the way, this is where I have my 3 properties, so I'm big on Arvada. 5-bed, 3-bath, 2,000 square feet. Purchase price for $675. It could do about 100,000 in gross revenue, and that would result in about $19,000 of cash flow. That's after literally everything, taxes, insurance, paying your cleaner. There's a capital reserve for maintenance and CapEx, all your utilities. Airbnb takes a fee as well. Then that cash flows after that fee. So this is what you're putting in your pocket, and that assumes 20% down and a 7.25% interest rate. So now let's do Bailey, which is in the foothills. It's about an hour outside of Denver. And this is a property we actually have off market. It's an active short-term rental that one of our clients operates, but they are starting a flipping business. They want to cash out and pivot to that, which I'm like, this is like just printing money for you and you're changing to flipping, but that's on them. So this is a 3-bed, 2-bath in it's for sale right now for $690, and that includes all furniture and the hot tub and all the amenities is all included in that price. The actual revenue for this year is about 105,000, and that would result in about $25,000 of cash flow, assuming 20% down, 7.25% interest rate. And then I will send this PowerPoint to everyone who attended and everyone who RSVP'd today. And so you can click in these links here to see the actual pro forma of how we got these numbers, and then the listing link as well, so you can see more photos and everything. And this is an example of Breckenridge Homes. This is an active listing on the MLS. The photos are bad, but it's a good property. So this is a 4-bed, 3-bath, 2,600 square feet. It is listed for 1.7 million, which I mean, you'd think for 1.7 million, they could actually take better photos, but sometimes they don't. And then gross revenue is about 170. And this is a general rule of thumb. For Summit County, you can basically expect about 10% in gross revenue of the purchase price. So 1.7 would result in about 170,000 gross revenue. And then in the pro forma, I have like comps that shows why, like to support that 170. And the cash flow here would be about 15,000. I want to make a note here as well. Denver and the mountains are not cash flow markets. We are an appreciation market. And so the fact that, you're getting this much cash flow, this wouldn't happen with a midterm or long-term rental. Really, short-term rentals are pretty much the only way you can cash flow unless you put, a large down payment. So cash flow will always pale in comparison to appreciation. So yeah, cash was kind of the cherry on top of appreciation. Like Summit County in this past year for single family homes, appreciation has been 18%. Even with the rates being how they are, a lot of people are buying in cash in Summit County, so they don't care about rates. And so there still is very high appreciation. So I mean, on this property, it'd be like over 200,000 in appreciation just in the year. And so the cash flow is like nothing compared to that. And so just kind of cherry on top. Just want to have you guys keep that in mind, that appreciation will always outweigh cash flow in this market or in Colorado. Okay, can I manage short-term rental from out of state? The answer is absolutely yes. We have many, many clients who do not live in state and they manage their properties remotely. And the biggest enabler for this is having a very strong team on the ground. So these 4 contractors are your biggest people to rely on. So having a cleaner that you trust and that can also restock your supplies takes all of the day-to-day like reasons why you need to go to the property out of the picture. Having a great cleaner, handyman to do maintenance tasks in between guests, a landscaper and snow removal will take care of all of the outside work. And so yeah, if you have these people on the ground, you really only have to come to the property like once or twice a year just to make sure everything's looking how you want it to look. And we have recommendations for any of these. So if you currently have a short-term rental, but you need a contractor, just let me know. I can send you our recommendations. Happy to help there. And then what you would need to do remotely are a couple things, and a lot of things can be automated. For example, dynamic pricing, there are softwares like PriceLabs, which automate changing your pricing based on demand. And so that takes all of the legwork out of the pricing. You can set up automated messaging for guests. So when a guest books, it'll send them a check-in message. And then when they're about to checkout message, it'll remind them to review your property. All that can be automated. And so only time you're talking to your guests are if they have a one-off question or a problem. But the day-to-day, like normal messaging can all be automated, which is fantastic. You can also automate notifying your cleaners of a new clean and then paying them after the clean. So you don't have to ever be texting your cleaners saying, hey, just a reminder, there's a checkout tomorrow. Like you should not be texting your cleaners that often. And then having your cleaners restock with supplies takes all of the work there out of buying supplies and stocking the closets. So the only things that you need to be doing manually are creating your listing on Airbnb and Vrbo, answering one-off guest questions like, do you have a grill? Or like, I don't know, where is the pack and play? Things like that. And then you have to coordinate with your contractors when repairs are needed. And that just comes with any sort of rental, whether it's short-term or long-term. And you can also outsource any of these things. Like I have people who you can pay a flat fee and they'll create your listing and your for Airbnb and Vrbo. You can also hire a full-on property manager for short-term rentals that will make this a completely passive investment for you. They charge a pretty penny, like 20 to 25%, but it'll make this very passive. So that is also a possibility. And then here's how I help you through the process if you are interested in purchasing an investment property in Colorado. So first, we meet remotely or in person and talk about your goals and your the rental strategies you want to pursue, whether it's short-term, single-family, multifamily. We talk more in detail about legislation restrictions and where it makes sense, whether it's metro or mountains for you to buy. Then we narrow down like exact towns and exact areas of those towns that would have the best demand. Then we look at property type too, whether it's single family, multifamily, bedroom count, other features that make the property attractive to your target demographic. Then before ever offering or even seeing a property, I'm running the numbers on, will this make cash flow for you? Because you always want to be very sure before making an offer or especially closing on a property that you're comfortable with the investment return that you'll be getting. And exit strategies as well. I always, talk about if short-term money doesn't work, what can you do? And are you comfortable with that exit strategy? And financing options. There are so many creative loan products for investors. If you think you don't have enough saved or you don't make enough money to buy an investment property, please reach out to me. There are so many creative products that are available to get you into your first property or, second or whatever you're buying. So please reach out to me. I'm not a lender, but I can tell you a lot about options that could be available for you and then connect you with a lender who has all these products. And then securing the property. This is like your normal real estate agent stuff, touring the properties, negotiating contract, everything like that. And closing. Then after closing, this is the very important part that why it's so important to work with a agent that has a short-term rental themselves and has all the insights to be a top performing short-term rental. So we coach you on what renovations make sense, if any, how to design and furnish it. If you need to work with a designer, we can recommend those. What amenities have the best ROI depending on your location and your property type. I help you create the listing to make sure it's optimized for the search engines and then automate all your messaging, your pricing, and then set you up with any vendors that you need to get your property set up and manage your property. And what was I gonna say about this? Oh yeah, I'm more of like a consultant. I don't do it for you, but I'm, consult along the way and make sure you're set up for success. Because that's my goal is for you to be successful upon launching the property. Okay, fun things here. We have a ton of off-market properties that short-term rental investors could be very attractive to them. So these are all fully furnished, turnkey, active short-term rentals. Some are more successful than others, but they all have the potential to be very successful. Some of the operators that are operating these weren't doing a great job, so they're selling, and but the houses themselves are fantastic. So if you're interested in getting more info about any of these, just email me or text me. I put my contact info in the chat. So just reach out there and I can send you more info on all of these. But there are some really cool properties here, as you can see. Okay, and quick info about our course. We just launched this on Black Friday. It's all about how to get into your first property, manage it, scale all that stuff, like LLC creation, tax benefits, like anything you can think of is in this course, and it's all just video modules. It's usually $9.99, but if you use my code, you get $4.99. Sorry, I sound like a salesperson, but I'm just pitching this because it's such a good resource for anyone that wants to get into short-term rentals. And then if you end up buying a home with me or any agent at Good Neighbor within a year of buying the course, you get totally refunded. So no risk if you're planning to buy a home at any point soon. Okay, now please get in touch with me if you'd like to chat more. I'm happy to answer questions now, but if you want to meet, have kind of more in-depth conversation about your specific situation, how you might, get into your next property, if you're looking to do 1031, if you're looking for like what are the tax benefits of buying rentals, if you have an existing property that isn't doing well and you want to know how to pivot that property into a more cash flowing investment, I'm happy to chat about all of that. And so yeah, you can scan my QR code there. That's the meeting for if you want to schedule a meeting, otherwise feel free to email. And I will try to bring you guys back up so I can see you. Okay, cool. So I'm happy to take questions now if anyone wants to either unmute themselves or raise your hand or type it into the chat if anyone has questions.
Management does your company?
Do you guys do property management yourself?
Okay. And if there are no questions, that's fine too. Yeah. Okay. Well, if there are no questions, then we can definitely adjourn early. Or I don't know if Greg, are you trying to say something? Keep lighting up. Okay. Maybe I just can't hear. Wait, I can't hear. Sorry. Maybe it's a me problem.
Can you hear me now?
Okay. So okay, does Good Neighbor listen to... Okay, sorry, I don't know why I can't hear. It's on. Oh, there we go. Sorry, I can hear you now.
You can hear me now?
Yes, that was my bad. Sorry.
Oh, that's no problem. We were just wondering if do you guys do actual property management, or do you suggest, or you have referrals for that?
Yeah, we just have referrals. We don't do property management ourselves, but I have several people in the Metro and Mountains that do property management. So happy to send you their info, whether it's short term. Are you talking about short term rentals or midterm?
Yes, it would be short-term rental in Estes Park.
Okay. Yeah, if you want to just send me an email asking, I can get back to you if you're looking for that. Yeah. Are there any other questions?
Not at this point from our end, but I appreciate your time.
On webinar.
Sorry, what? Oh, Greg, were you saying something?
No, I was just saying thank you. I lost, we lost internet for a little bit, so I didn't quite get the whole podcast here.
Okay, yeah, it's recorded and I can send out the link to, I'll send out the presentation and the recording
Okay.
so you can rewatch it or watch the parts you missed.
Okay, that'd be great. I appreciate that. Thank you.
Yeah, of course.
Olivia, can you hear me?
Yes.
Sorry. Great talk. What is the current property management rate out in both the mountains and the Front Range?
Front Range is probably 20. The ski resort towns are 20 to 30, unfortunately.
And that's of the monthly rate or the stay rate or?
Of the gross revenue. So monthly booking amount, it's 30% or whatever percentage of that. So it is very hard to cash flow. If you buy now or if you've bought recently, it's very hard to cash flow with a property manager unless you bought in cash or, put half the amount down. So we do like to help our clients figure out how to run a property remotely because it does save you, 20% margin. But I understand it's not for everyone, so we definitely have people we can refer out. But it is feasible to run it remotely too.
Olivia, we just closed on a property in Teller County. In the beginning, you mentioned there's some questionable legislation with rentals there. Could you elaborate?
Yeah, so are you in Woodland Park? Are you like unincorporated Teller?
It's Cripple Creek, but unincorporated, so it's outside of the city limits, so no short-term rental license required.
Okay. Yeah, so Woodland Park is in Teller County, and Woodland Park, like the city, has put legislation around short-term rentals saying that it must be a primary residence in order to short-term rent. And maybe about a year ago, Teller County had said, before Woodland Park had made that legislation, Teller County had said they will follow suit with whatever Woodland Park does. And then Woodland Park put the primary only restriction on short-term rentals. And so Teller County, from what they said, should be implementing that rule as well. But now the citizens of Woodland Park are suing the whatever entity made that rule in the government. And so we're not sure how Teller County is if they're gonna follow suit with Woodland Park, because they're not gonna want to get sued. So I think it depends what happens with the lawsuit. But I don't know if that's news to you or if you know any other like more recent updates.
No, that's news to me. We closed less than a month ago with the help of the brokerage, Good Neighbor.
Okay.
And the information we got was Cripple Creek is good for short-term rentals, but because we're outside of Cripple Creek, we're unincorporated. There were no short-term rental restrictions.
Okay, Cripple
We're
Creek
not
could be
Woodland Park.
different, but it's still unincorporated Teller.
It is.
Okay.
Hey, Olivia?
Yep.
All right, we've got one more question. My wife has a question. We live up here in Estes Park, and I think they have a rule that your property management must live within like, I think 45 minutes to an hour. Are you
Yes.
aware of that?
I would have to check for Estes Park. I know like in Vail they have that. Vail and Idaho Springs, they have that rule. It could be possible for Estes as well, yeah. But we have clients up there. I can see who they're using.
Okay.
Yeah.
So in other words, though, there's no way around that if we want to remotely do it ourselves.
Oh, so it's not just for property managers. If you need a contact, some places require a 24-hour contact that lives within certain driving distance away from a property.
Yeah.
In that case, I just have it be your cleaner. If they're okay with that. Yeah.
Okay.
All right.
Yeah. And then Nicole, sorry, I didn't finish answer your question, but we can talk offline, or if you want to reach out to whoever you bought the property with. I could be mistaken for Cripple Creek, like that might be different. But yeah, I'd have to dig into that deeper.
Okay, yeah, I can reach out to the realtor we work with. Thanks.
Okay. Sounds good. Melissa said, could you give some examples of creative financing for someone with little money saved? Yes, definitely. I've done a couple of these this year with clients who didn't want to, wanted to conserve as much cash as possible. So there's a couple of things you could do. One of which is get a loan for, get a mortgage for a property. Say it's an investment loan, so you need 20% down. For sake of numbers, let's say it's a $500,000 property, and so you need to put $100,000 down and get a $400,000 mortgage. You could, get a loan for that $400,000 chunk, and then have the seller finance the remaining down payment. They're likely not going to finance the entire thing, but maybe they'll finance 50 or 80,000. So you only have to come to the table with 20 or 50,000, depending on how much they can finance. And then that seller carried portion is completely negotiable, like interest rate, payment terms, amortization schedule, all negotiable. So it's really just case by case of whether it's a good deal or not. And then there's other seller financing scenarios where the seller owns the property outright. And so you don't need a bank and the seller can actually be the bank. Oftentimes here, though, they do want you to have skin in the game. So they require, a pretty hefty down payment. But with seller financing, it's all negotiable. So it might be if you have like a friend or a family member or like an acquaintance that is selling a property and trusts you and would be willing to finance a good chunk of the mortgage, that's a way that you could only put a little bit down. It just depends on the situation. I would say in my experience, most seller finance deals are not good. Like I've had one seller who's like, I'll seller finance, but I want a 20% interest rate. And I'm like, that's not the point of seller financing. So every now and then we do find a great seller finance deal and it's a win-win for everyone. But it's a needle in a haystack. So missing any other questions?
I have one more question.
Okay.
Are there any builders? There's a lot of building going on in the Front Range. Are there any builders that are offering incentives or cash back, et cetera, in order to fund their construction projects and go on to the next project, for example?
Yes, every now and then we see that, whether they're offering a concession for loan costs or they're offering a buy down or whatever the case may be. Oftentimes, I guess the Front Range is a bit different, but oftentimes new builds are in HOA communities, and I generally advise to steer clear of HOAs because they can impose restrictions on short-term rentals at any given time. Some HOAs in the Front Range, especially in Park County, I've seen this a lot. It's like a $10 a year HOA fee, and that's just to get fishing access. And so when you have lower HOAs, they don't often care about. They don't have like lots of covenants, so that can be doable. But yeah, new builds are hard just because they often have either party wall agreements or HOAs, and even if they allow short-term rentals now, they might not allow it in a year. And so I am always cautious to have clients buy in HOA communities as investment properties. But yes, if you want to send me an email, I can do some digging for you if you tell me what areas you're interested in. There are some new build either communities or just one-offs that aren't selling, and so you might be able to get a good deal. All right. Well, again, I'm always available if you want to talk one-on-one at another time, but thank you guys so much for attending. I hope you learned something, and I will send out this presentation probably on Monday for anyone that wants to review it. And if you want to send it to anyone else who might be interested as well, that'd be great.
Hey,
as well.
Olivia.
Yes.
Hey, this is Donald. I texted you on Zoom. Basically, I've been running virtual assistants company for the last probably like more than a decade now, supporting STR business owners and property management companies in the US. So we have staff in India, and then we have a company in America. So I'm looking for opportunities where I could co-host on percentage. Definitely my costings will be quite lower than what it is there in the States, because I don't pay taxes there in America because we do receive funds here in India. So I wanted to talk to you on these fronts. I texted you just in case if you'd be interested. I'd like to get connected to you and showcase what we can do.
Okay. Yeah. Thanks. I'll take a look.
Thank you. Bye.
Of course. Okay, great. Well, yeah, thank you so much, guys. And yeah, hope to talk to you soon. Okay. Bye, everyone.